Good afternoon. Welcome to OptionsTender. I hope everybody had a wonderful extended weekend. Welcome traders. It's Tuesday. We had Monday off for President's Day, and it's February 18th, 2025. We're doing this intraday about 12:30 Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. It's 99 cents, comes with Discord and trade alerts. So today, I'm going to show you a couple setups focused on, I'm going to do a few different things. This isn't going to be the standard video. Nothing really has changed from yesterday. I still don't like the fact that SPX has not reached 6128 all-time highs from back on, what was it, January 24th? Okay. SPY has. So SPY made a new all-time high. We're at historic trend lines right now. We're hitting them for the third time. Okay, so that's the major premise, but I want to give you, I don't want to take out of the picture the bull aspect. It's just, I'm not going to get bullish until we get over those trend lines. And SMH and IWM are really, really defined at this point. So I'll show you those. So make sure you stick around. Play this video at 1.25 speed or 1.5 to get all of the information, you guys. So a lot of cool stuff here. I might sound like a mouse, but it'll be worth it. Okay. So on SPX, we're looking at the daily time frame. The 2008 and the 2021 top here. I know some people say 2022, it was in January, but the tech market was at 2021, doesn't matter. Anyway, 1929 to 2000 trend lines right here. Huge confluence right there. Okay, so we're paying attention to that. And while we're on SPX, I'll show you this. This is a bearish rising wedge, getting real tight price action into this. So we're on the Bollinger Bands, which I'm not going to show right now, getting really tight. We haven't been this tight in the Bollinger Bands in a long time. So big moves coming, whether it's up or down. No bias there. The only bias is that we're against huge resistance here. Now, the McClellan oscillator, just want to show this. All right, yeah, there's a lot of information. I have the maximum time frame on there. And the reason why I have the maximum time frame before I jump into the oscillator is I really, really had to shape out and put right on the top of the wicks here. Right on top of the wicks for 2000 and so on. I'm not going to go all the way 1929. I really wanted to get a perfect trend line because it's so important right now. And so again, 2008 is right on the tip, right, using the wicks, and so we're there right now. So here's the oscillator. At this point, we had a high here, and on SPY we have a lower high in the McClellan oscillator, but we haven't quite made a new high here. Okay, so either way, it looks like money's coming out, but we'll see if this is a low here on the zero. If we break down from that zero and start getting into the negative, we're going to see some really negative price action. So if we do get that new high, it's 10 points away from here on SPX, 1 point away on SPY. We'll see this negative divergence there, but really this isn't a divergence yet because we haven't made a new high on SPX. Okay, next, the McClellan Summation Index. This one we looked at some time ago. The only thing I added in there was these trends with the dashed lines here. So we have this trend that price seems to appreciate. Okay, and the main thing on this one that I want to show is we're still in a downtrend, and we're right at that bull bear pivot that I have at 1600. We're just above it at this point, but this whole gray area is where price usually reverses off of in the past. Let me see if I can it's just a really important area. I started it back here, so you can see where price made a bottom at the bottom of the gray area, oscillated around there, but was in a downtrend, but couldn't get back above it, right? So held on here this whole time. We're in a bullish trend up here. Even though the price action was going down here and diverging, we still held this gray area, even made a bounce there. And then finally, even though we made new highs, broke down from this area and back tested. Okay, so we're still at all-time highs. Back tested this gray area, and that's when you started to see the real decline was underneath, when it got back underneath the 1,000 line, which is the automatic setting is the 1,000 is kind of that bull bear for this indicator. But I know that according to what I see, it's more this entire gray area. Okay, so that's why I illustrated myself here, and then getting into those extreme bearish and extreme bullish territory. All right, so same thing now. Still making those highs, right? Just like back here, but started to break down. All right, we had our breakdown back here, made a new high in price action, and made a lower high here on the index. Broke down in this bull bear territory, made new highs on price action, and possibly even again today, if it makes 61.28, and back testing. Okay, so if this starts to curl down again, we're probably going to start seeing our correction start happening. And by correction, I mean, in my opinion, a bear market. But we'll see. We'll see how that goes. We can't say that it's official at that point. But as soon as we break this trend line, when we do, we're going to have to, it's a sell signal. We're going to have to see where price goes. And I think the first spot would be this 560 and 555 zone. It's a big zone, but that's where it would be at. I talked about it numerous times in the past. Okay, now let's go ahead and go to the two setups here in first SMH. At first glance, this is a bear flag. We had an impulse wave down, bear flag, broke down from the flag, back tested. We're back in it. Okay, so it would be very, very important for this to hold and to continue to work its way up this flag. All right, that's one way to look at it. Let me take this down there. That's one way to look at it. And then the other, which is a lot more clean, would be our Elliott wave pattern here in our Fibonacci retracements. So this initial wave 1 into an A, B, and this is an ending expanding diagonal right here, into a C for wave 2 at the 786 retracement. All right, and then the next 1, 2 right into the 62% retracement there. So impulse wave, and we should start to see this really get bearish at this time. So this is a fantastic, clear, clean, bearish setup. Doesn't mean it has to work, but it doesn't get much more clean than this. Okay, so IWM is saying, hey, we have this trend line here, just kind of oscillating around it, but gained it again, and we really need to see it hold on to here and start working its way higher. Okay, now again, it's a lot more clean if we do this. So we see, first of all, go to the whole big picture, and that's this entire move was an A. We're looking at this entire move that took a couple years being a B, and that was an A, B, 1, 2, 3, 4, and 5 wave move there for a B. And we're looking for an impulse wave C to test the lows or head much lower than that if need be, depending on what the rest of the market's doing. Okay, and so with that said, if we're in the C wave, we're looking for this to start off with an impulse 1. And we're back testing or retracing to the 50%. Couldn't get above there. So even at first, we need this price action to make a new high here. And it's possible it gets up to the 62 and all the way to 786 really. But nice clean setup as well. If price is done here, this is a 1-2 setup. It doesn't have to go any further. All right, and then we should start breaking down from this point. So the setup is here. I like SMH setup better because this still could move to the upside to 62% retracement. Very volatile, but if this is going to help lead us to the downside, then this could be done. This could be done right here now. And we should see this start breaking down. So those two indexes are telling us, hey, we're setting up to the downside. Now, that leaves DIA, not a whole bunch of room here, but we have a triangle that's happening right here. So if the triangle breaks to the upside, we can get another divergent high here on multiple time frames, and maybe that helps keep the market up for a little bit. But that has a little bit of room, but it still has a lower high right now. We'll just see where this triangle breaks out. Now, with that said, that leaves the Qs. That leaves the tech market to lift everything if this is going to continue higher. So if SPY, SPX, ES, if they're all going to have a whole nother wave to the upside, this is all pretty much going to be on the back of big tech. All right, we had our breakout here from the zone and the downtrend line, this megaphone pattern. This has no business breaking back below. So if we do get a pullback here, which I think is quite possible, seeing how we took a short on NVIDIA today, a beautiful setup. It's at its downtrend line, and Meta starting to break down finally. So, very healthy to pull back here, but has no business breaking back into the zone and further from there. Okay, so it's really difficult to see what's happening. Could this be an A expanded B, and we get some sort of flat pattern here, C, and still be bullish in the long term? Yeah, I mean, we hold this trend line. Sure, we could have higher prices to go, but this really just has no business breaking down from any of the 8 EMA and such. And I'll pull that up in just a second too. But going back to here for a second, the advanced decline, we do have the balance of power here. We already have negative divergence on SPY, but not on SPX. So again, it's just kind of odd. We haven't hit new highs yet, but we'll probably do it today or tomorrow. We'll see. And then all the negative divergence, boom. So this is a good indicator for that to happen. But we already have negative divergence on the SPY there. The SPY. Advanced decline. We looked at this in the Discord. Now this is a super important indicator because the advanced decline doesn't have divergences very often, and when it does, it's a really good sign that the market is at a turning point. So this was a clear sign right here where we made new highs, but the tech market did not. All right, made new highs and then broke down, made a lower high, broke down. All right, so there's a negative divergence, and right now we made new highs, and again we'll probably make another new high here and lower highs. All right, so that's what we're looking at. That's just more indications that we're at a turn here pretty soon. Now again, if we want to break above this structure, it's possibly a 1-2, and then maybe some sort of 1-2, 1-2. We really have no business breaking this bull flag. All right, and if it does, we shouldn't break this trend line. Such big areas. And then I know that one person was talking about this being a bull flag, and you can simply backtest that bull flag again. Okay, so there is another way to draw it. If this is all one structure from this point, and you have a 1, 2, 3, 4. So then if we have the 1 and the 2 and the 4 set, then this could be drawn for these tops here. And so we have a little bit more room to where we're just kind of back testing this flag still, and we're still in the same zone. So if we pull back and hold that, we call it 5,900 area, 5,920, this trend line, then we clearly have a possibility to continue to the upside. And that would just be an A, B, C here. And so maybe that's just a larger wave 2, okay, for this 1, 2 setup and moving higher to the top of the, it doesn't have to in a wave 5, but likely to get to 64 or higher, you know, depending on how much time it takes to get up there, 6,500 or so. Yeah, but that would be another trend that's possible if that holds. But I'm weary of it because if we break down from there, we're already breaking this major trend line once again. Okay, so unless it's some sort of quick like wick there, but either way, doesn't matter. We're putting our backs against this historic trend lines from 1929 and 2008 there. All right, taking a look at the volatility of the NASDAQ. I'll just show this here because I forgot to put it in the members video. And it looks crazy out here. It's because they changed the ticker. They add the CGI, just like the TNX in here. CGI is to SIBO. So this information is probably the best we have since here. But clearly we're holding a inverse head and shoulder right now. Came back here on Friday, and now we're actually pushing back above this trend line here that we have in. So if we start to break the 20, it's a downtrend. So about 22, if we break 22, we should be off to the races there, and the market should be heading lower. On the VIX, same concept. We talked about this trend line here. That on the weekly is a large wedge, bullish falling wedge, and we're testing that and testing that, and really we're just forming some sort of pennant or flag off of this pole from this low. Okay, nice pop, breakout. You see this wedge right here, broke out from it, and then consolidating, and then right at the lows there, in this confluence from the that weekly wedge and the lows here, trend line, we had a pop above there. Okay, so yeah, this could come back over here to test, you know, if price action's not doing anything, but just holding in this range. We're at the lower end of the range, so I do suspect that we, the odds are head to the higher end. Okay, what else do we want to cover? I think that might be it, you guys. That's all I want to cover today. Everything seems to be working just the way it was supposed to. We had a few names that we covered on Friday. Amazon, it broke down from its channel, so that's bearish right now. Again, NVIDIA breaking down from the channel top. Microsoft's still holding up, and we're still holding calls on Microsoft. We'll see how that goes, though. And we expect SPY to. I don't think we actually looked at SPY today. And so we have this megaphone pattern that we're still filling out. All right, so we still have a little bit higher that we could go on SPY. About 612 makes sense if price goes a little bit higher, and SPX needs to tag its all-time highs. So we still could go just a little bit higher to 612 before seeing any reaction off of this. And you see that's a 2008 and 2021 in turquoise. We don't have the information that goes that far back for 1929, so I don't have that line on here. I'll just give you a closer look at we drew this on Friday. We drew it as a zone here because we're rejecting off of this, but this is just from the bodies of those wicks of the megaphone. So we have more of a range here where now we're using the top of the wicks there. So it's more of a zone. If price gets above here, then it should make it up to that about 612 area. All right. And so from this point of view, we have a flag that broke out and a flag that formed again. Really, the 8 EMA is right in the zone. We really don't have much business getting below it. So, you know, if we want to be bullish, this should hold. Maybe we're getting 1, 2, 1, 2, and then a 1, 2 nesting, and then wave 3 should be pretty resilient to the upside at that point. All right, but we'll see. We'll see where it takes us. Options expected move to the upper end for this week is 618. Lower end is 601. So if we're bullish and pull back, you know, we should reach this by the end of the week here at 618. So we'll keep an eye on that zone there. All right, that's it, you guys. Thanks for watching. Don't forget to like and subscribe. Thank you for all the support. This channel is growing. Let's keep it growing. Get this good information out to all these traders. Stay safe. We'll see you soon.